Shares of PSU banks are having a dream run. The Bank Nifty is at a record high. On the other hand, the performance of the PSU Bank Index is also good. From the lows of June, Nifty PSU Bank has risen over 40%. However, it is still 26% below its all-time high reached in 2015. Amid a pickup in the market momentum and an improved economic outlook, PSU banking sector has recovered from the bad non-performing asset phase. But why are PSU Bank attracting investors?
Let's look at the factors. Availability at a cheap valuation and positive quarterly results led to jump in PSU shares. Double-digit growth in deposits and loan books, decline in provisioning and improvement in asset quality are the prominent reasons for that. The net profit of Bank of Baroda increased 79% in the June quarter. The combined profit of all the members of Nifty PSU Bank Index is around 15,300 crore rupees, which is over 9% higher than last year. However, 3 out of 12 banks here, State Bank of India, Punjab National Bank and Bank of India's profits declined around 7 to 70%. The decline in profit by these lenders has been attributed to mark-to-market losses given the recent increase in bond yields.
SBI shares have given good returns. In the last 1 year, this share has given a return of 32%. Recently, the market cap of SBI crossed 5 lakh crore rupees. Investors are choosing SBI because of healthy loan growth and stable asset quality. Analysts are bullish regarding PSU banks because this sector has emerged from the phase of non-performing assets. Analysts feel the revival of the economy and the growth will benefit PSU banks the most. Due to lower NPAs, even their provisioning is declining. That's why they can improve quickly. This can increase credit growth, net interest margins and fee-based income of PSU banks.
Many analysts feel that for the next 1 year, there can be rally in shares of PSU banks. Analysts feel that before this, there was a capex cycle like this in 2004-05. Due to this, valuation of banks increased at quick pace and their shares gave pretty good returns. Experts suggested that NPA cycle has peaked in December 2021 and after that it has fallen a lot. Similarly, banking credit growth went up from 6% in January to 15% now.
As per the recent Banks India report by Kotak Institutional Equities, asset quality normalization and return of credit growth have brought some of the regional, PSU and mid-tier bank stocks back on the investor radar. Payment activity stayed strong in August. Loan growth improved to an approximate 15% year-on-year, led by retail and MSME. Both lending and deposit rates continued their upward march in this rising rate environment. According to the most recent RBI data, deposit rates were up 10 basis points in August 2022, implying a 20 basis point increase from the low of 5%. Both private and public sector banks have begun to raise their deposit rates. Rajesh Sinha, senior research analyst, Bonanza Portfolio stated, as the economy opened, corporates are either expanding or investing in capex. Most of these funds requirements will be borrowed from PSU banks. This will lead to an increase in credit offtake of corporate. Recovery is going to be better than expected as asset quality is improving with decreasing provisions. Government's increased focus on privatization, better quarterly numbers and cheaper valuations also makes PSU banks more attractive amongst investors. Now, let's look at the share performance. Bank of Baroda, Indian Bank and Punjab National Bank have given absolute returns of 15% in the last month. In the last 1 year, Bank of Baroda gave 74% and Indian Bank gave 65% return.
Now the question is, should you invest in the PSU bank shares? So, experts suggest that this rally can continue in the future. In the second quarter of FY23, loan disbursement of PSU banks would improve. Experts feel that there is a lot of scope in PSU banks, because credit growth will continue while inflation seems to have peaked. But the fact is that PSU generally works in cyclical sectors. This means that for a specific period their income can grow while for a period after that their income can take a hit. This depends on what phase of the cycle do we stand at that point.
So, investors need to be very careful regarding timing of entry and exiting these shares. But it's not easy for investors to time the exit from these shares.
Hence, you should have a deep understanding about public sector banks, their business cycle, government policies, etc. If you don't understand even after that, then you can take advice of some financial expert. Also, you can watch stock related shows on Money9 where market experts will give you advice on regular basis.